I'm Owen Bigland. This is the Inside Edge video blog. Okay, let's talk about the mortgage rate hikes. I've done a few blogs on this, but let's keep going because it's the only thing that's in the news here. I just got back from a little Easter vacation, and I kind of disconnect from a lot of the real estate. That's one of the great things when I do go away. I try and get away 5-6 times a year for little breaks, a week here, 10 days there, recharge my batteries. I turn off pretty much everything if I can. I've got to have my phone with me, and I'm corresponding back and forth with things that I've got going on here a bit. But I tune out. I don't watch the news to begin with, but I tune out a lot of my newsletters and a lot of the day-to-day stuff that I have to read every day on the real estate market and prices, and we're in a bubble and interest rates and all that. So I got back on the weekend, and of course, that's all that's in the newsletters here. Bloomberg, every single morning, interest rate hikes, and Canadians are going to be in serious trouble. We just had another 50 basis point hike. We've got 4 or 5 more of these on tap over the next 10 or 12 months. Canadians are going to be in the poorhouse, living on the streets. Another one they came out with there, and we've seen this, they keep rolling this same one out. 33% of Canadians are one paycheck away from being insolvent. Yeah, maybe they are. I don't know. I don't see them. But then again, maybe I'm insulated here. I live in an expensive city like Vancouver. It's a pretty well-heeled city. There's lots of money here. But maybe they're out there. I don't know. But of course, all you hear about is the interest rate hikes, and boy, a lot of people are going to be in trouble. So, and I get comments in my YouTube channel here, how is this going to influence the Vancouver real estate market, Owen? Well, I've done a lot of blogs on this. Let's hit it again. Of course, interest rate hikes are going to have an effect on real estate prices. One of the reasons why our prices have been so high here, especially in the detached market, condos not quite to that extent, although we're pretty much near all-time record highs for condos. I've been setting new price records for a lot of stratas downtown this past spring. But, for sure, for every quarter point or a half point hike, it's a cold bucket of water on the market. And one of the reasons why markets have been so strong is with the low interest rates we've enjoyed here. So for sure, they are going to have an effect moving forward. But they'll have a different effect depending on the segment, the type of product you're buying. First, start with downtown condos. So for downtown one-bedroom condos, I've said that there's 2 worlds of condos in many of my blogs over the years. There's the really high quality, incredibly well-run stratas, good locations, low noise level, one-bedroom condos that I'm continuously buying for my clients, either investor buyers or principal residence buyers. Those high-quality one-bedrooms are pretty resilient. I've been in this market over 3 decades. Sure, they can take a bit of a hit as interest rates go up, but they are pretty resilient. Give you an example. There's probably 300 one-bedroom condos right now in downtown Vancouver, Mount Pleasant, Kitsilano, Fairview. Of those 300, I am interested in a total right now, as we speak, of 4. 3, I'm pretty interested in, and I'm going to write offers on over the next week or so. One of them, they're looking at offers next week. I'll probably be in the hunt for that. The 4th one I like, but it's overpriced. Been on the market for a while, but I'll probably take a run at that as well. I'll throw an offer in, see if we can negotiate something else. So 4 out of 300. Now, there's probably another dozen or so that could be pretty good. I know the stratas, they're decent, but I tend to go after the best with my investors and my principal residence buyers, and we're patient. We'll wait for the right ones. Those ones rarely go on sale. Yeah, they'll take a little bit of a dip here and there, 5%, maybe a little bit more, but they're pretty resilient. Good quality 2 bedrooms, pretty much the same. Another couple quarter point hikes, probably not going to have much of a difference on that. It's as you move up the food chain. So the luxury condos over 2 million, over 3 million, for sure. As the interest rate hikes keep coming, those will be a cold bucket of water on demand, and you'll start to see prices come down a little bit. Detached market, I think, as well too. When you're talking $2-3 million, $4 million for a detached home, interest rates go up another 1.5 points here, another 1.5%. For sure, that could knock 5% off those homes. But one of the things I want to point out to people, how resilient Vancouver is, and these media outlets continue to point to people being one paycheck away or one more 25-point basis hike away from being in trouble. And I just do not see that. I don't see it with any of my clients, whether we're buying a one-bedroom or we're buying a $4 million Kitsilano detached. I don't know any of my clients that will not have any problem with another 4, 5, 6 quarter-point interest rate hikes. Because keep in mind, even if we get up to a 4% 3-year fixed, or even a 4.5 3-year fixed, that is still an absolute gravy train. Low interest rate here. We are going to be in a low interest rate environment for the foreseeable future here, regardless of how many interest rate hikes we get. Anything under, in my opinion, under 6, 7%, 8%, is not a bad interest rate. Remember, I'm coming from, I've told you guys, and many old timers will be able to tell you, of interest rates of 14, 15%. So 6, 7% is still well below our 20-year historic average in Canada. Interest rates are going to go up, make no doubt about it. Some people probably will be in trouble as we start to get 3 or 4 more of these. But the other thing I want to point out is that in Vancouver, and just the lower mainland in general, the media always points to people being over leveraged. In other words, they make it sound like everyone's putting 5% down on a home or 10% down on a home. And how many times have I told you guys on this blog here, it's just simply not happening in Vancouver or the lower mainland. I can count on one hand the last 5 years out of the hundreds and hundreds of homes I've sold, either listed or bought on the buying side, where they have used high ratio financing. First off, you cannot use high ratio financing on anything over $1 million. So that's less than 20% down is high ratio. My average sale for the last couple years is well over $1 million a year now. I mostly work Vancouver, downtown, east side, west side, detached. My average sale price is well over $1 million now. You have to use a conventional mortgage, 20% down with anything over $1 million. But the vast majority, you'll never hear this in the media because they're not privy to any of this, nor do they care. Because why let the facts get in the way of a good story? And the good story is the fear cocoon that they always want you in, the doom and gloom, the pessimism, the envy angle, which is all they ever play up. But most people are using conventional mortgages. All my buyers are using conventional mortgages. 20%, 25% down. All my investor clients are using 20, 25, 30% down. You have to get to buy an investment home or property. So there's plenty of equity in there. The other thing I point out is I don't understand why a quarter point hike, 25 basis points, and now 50 has got some people on the edge. And even if we get a couple more. Because what was the purpose of the stress test? People have been stress tested here for the last 3 years at a much higher rate. It's 2% above the posted rate. So there is lots of room already built in with the stress test on this. And that's where I call a lot of the media's bluff on this, at least in Vancouver. I can't speak for other markets, maybe the interior of BC or the Fraser Valley or, of course, other provinces that are much less expensive than Canada. I guess maybe they are using high ratio a lot more. But we do not use high ratio mortgages here. It's conventional mortgages, 20, 25, 30% down. In BC too, I've thrown this stat out many times. We've got an incredibly high percentage of homeowners here that own clear title. They do not have a mortgage. They are not over leveraged by any means. I sell probably 6, 7, 8 homes a year where my seller does not have a mortgage. There's no charge on title. And some of them maybe own the home only 10 or 12 years and have paid the thing off. So, for that reason, don't let the media spook you. I'm sure that there are people, I've often talked about this, that have over-leveraged themselves somehow. I don't know how they've done it, because if they're buying in Vancouver, they're coming up with 20% down or more. Maybe they're doing it in some of these rural areas where they're able to do high ratio. They're not doing it from the Canadian banks, the big banks, because again, their stress test and their mortgage gauntlet that you have to go through to qualify is incredibly difficult. Anyone that's tried to get a mortgage here through TD or Royal Bank or any of the Canadian banks knows what I'm talking about here. The only situation where someone would be getting in trouble is, they've gone to some 3rd or 4th tier lender because they can't qualify through a bigger lender like a Canadian a Royal Bank or a TD, and they're paying some ridiculous, loan shark interest rate of 7 or 8 or 9%. Those people could be in trouble, but I'm not familiar with any of them. They're not in Vancouver. Most people that are buying condos downtown here, again, are all putting down 20, 25, 30% down, well qualified, stress tests and everything else. The final thing I'll say on this as well is, again, you have to, I guess, be in this business for 20 or 25 years to understand where interest rates are right now compared to their historic averages. We are in some incredibly favorable interest rate environment here. Yes, those rates are going to go up steady, but in my opinion, anything under 4.5%, 5% is very attractive. People ask me, well, Owen, where does it get to where you would pull out of a variable and lock into a fixed? Well, I've got both variable and fixed right now, and I just locked in a 3-year fix last month, or about 6 weeks ago, at 2.8%. But I've got several variable rates running, and yeah, they've been creeping up. But I think for me, I use the advice of my mortgage guy because it's going to be slow increases here, but probably maybe when it hits maybe around 3%, 3.25%, then I might roll it into a fix. But let's see, we think we've got some more room here to go. And that could be 6 or 7 months before it gets to that rate, who knows? But I play it by ear, and I also just take the advice of my mortgage guys. They keep a lot closer tab on this than I do. But, I'm not all that. And the other thing too, just keep in mind with variable rate mortgages, and another thing the media gets wrong with it, they seem to think that the payments are going to start to skyrocket on these people. Remember that for the most part does not happen. With most variable rate mortgages, your payment stays the same. If it goes up 75 basis points, you're going to still pay the same amount every month. The only difference is, of course, is you're paying less principal and more interest. And they always wash over that fact. They make it sound like your mortgage payment's going to go from $2,000 to $2,700. Generally, with most variable rates, the rate is floating, but the payment isn't floating. It will stay the same. You just pay off less principal and more interest. But you can always lock in into a fixed term. So interest rates going up, they will have an effect on the market moving forward, especially on the higher price categories for sure. But I do not see any fear right now. And geez, if the threat of a 4.5% or 5% interest rate hike is keeping you up at night, being able to lock in down the road or having to renew at a higher interest rate, and you're worried about making those payments, my God, you had no business buying a house if that's the situation. You should have been stress test first off. You probably were at a much higher rate. But gee, as one guy was pointing out here that I saw in the Wall Street Journal here about talking about, if you weren't expecting higher interest rates and you can't afford to pay it 4.5%, 5%, then you probably had no business buying a house because there were only one way to go. How many blogs have I done on it over the last couple years saying that, listen, enjoy these rates, but there's only one way to go from here, and that's up. And the government has been stress testing you anyway, so you should be fine. I'm Owen Bigland. As always, I'll see you next week.